Hello everyone, it's Wednesday, April 29, and today we will examine the charts for the euro and the British pound to identify potential market trends. As you can see, the European currency remains under pressure ahead of the upcoming monetary policy meetings of the Federal Reserve and the European Central Bank, with the latter scheduled for tomorrow. Amid ongoing uncertainty in the Middle East, there is hesitance among investors to buy risky assets. The strength of the US dollar is also relatively weak. Obviously, trading is likely to remain range-bound until today's Fed meeting. Yesterday, the dollar received a boost from US consumer confidence data, which improved to 92.8, exceeding March's reading and surpassing economists' expectations of a decline to 89 points. Despite these, the euro-dollar pair did not reach last week's low, prompting traders to begin locking in profits as they exercise caution ahead of the Fed meeting. While unexpected statements from policymakers are not anticipated, this meeting is significant, especially given the uncertainty surrounding economic prospects and potential leadership change at the Fed. The central bank is widely expected to maintain its benchmark federal funds rate at 3.5%, 3.75% for the third consecutive meeting. Investors will likely to be looking for insights regarding the future policy path from Fed Jerome Powell's remarks, particularly in light of the ongoing conflict in the Middle East. Moreover, today's press conference could mark Powell's loss as Fed chair, making it a key focus for market participants. Turning to today's fundamentals, the macroeconomic calendar features data on loans to households and the M3 measure of money supply from the euro area. These reports are unlikely to trigger significant price movements. Germany is scheduled to release inflation data. The Consumer Price Index in Europe's largest economy is expected to show a month-on-month increase of 0.6% and a year-on-year rise of 3%. This would indicate a slowdown following a sharp spike of 1.1% in March. Such figures may enable the ECB to maintain its current monetary policy stance, avoiding tightening as it continues to seek ways to support the economy. On the US front, today's calendar is filled with reports on durable goods orders, building permits, housing starts, and the goods trade balance. However, all attention will likely be on the Fed meeting and the subsequent press conference with Jerome Powell. Now, let's move to technical analysis. The 1-hour EUR USD chart indicates that a false breakout at 16.94 would generate a buy signal, targeting 17.20. A break above this level could lift the euro to 17.37, potentially opening the door to 17.53 if the Fed adopts a more dovish stance. At 17.53, I would recommend considering short positions on a rebound, anticipating a move of 15-20 pips. Short entries at 17.20 and 17.37 should be evaluated under false breakout, with a target set at 16.94. If buying activity in this area is weak, a break and hold below 16.94 could push the euro down to 16.71, where it would be wise to consider long positions under false breakout. Conversely, if the Fed adopts a more hawkish position, the pair could decline to 16.45 and even 16.19. At these levels, traders are advised to open long positions on rebound, aiming for an intraday correction of 25-30 pips. Turning to the GBP USD pair, the trading setup is similar. False breakouts at 34.95 and 34.71 would present buying opportunities. Long positions on a rebound could be considered at 34.46 and 34.16, targeting a move of 25-30 pips. As shown on the chart, the pound-dollar pair is currently trading within a wide sideways range, hovering around its midpoint. With no significant economic releases from the UK scheduled for today, a correction could be in store, and the next move could go in either direction. A false breakout at 35.24 would trigger a sell signal, potentially pulling the price down to 1.3495. Additionally, short positions could be considered on the false breakout at 35.49. In the event of a dovish stance from the Fed, sell entries could be placed at 35.72 or 35.96 with the targets of 25-30 pips. A rise to the latter level is likely in context of the de-escalation in the Middle East. Best of luck to everyone.